This, of course, is finally the tally for LME metals in the week gone by. I think let's connect then with Ross Strachan. He's a senior commodities economist at Capital Economics to talk about all the happenings of the week gone by. Ross, appreciate you joining us on ET Now's Commodity First. I want to start off by talking to you about the entire crisis at Brazil. I think it's very resemblant. It's reminding us essentially of what happened with Norsk Hydro. Are we staring at a significant shortfall of supplies in iron ore in the world on account of this force majeure?
We don't think there will be a significant shortfall. In fact, I mean, obviously the situation is very fluid and can change somewhat in unexpected angles, and it's far from clear exactly what steps the various authorities will choose to take. However, if the most recent decision to close the 30 million ton mine is reversed and Vale are taking appropriate legal steps to have that decision overturned, they have announced in a recent press release. In that case, we think that the market will be broadly balanced this year. Admittedly, that's a significant change from a rather large surplus that we had been anticipating. But given the sharpness in the global economic growth picture that we're expecting, we think the market will be broadly balanced this year. And so the current spike that we're seeing, which may well extend to see prices going over $100 per ton in the very short term, will prove to be just that, a spike, and we will see prices drop back very sharply later in the year.
You know, that's really how it's been for the commodity complex. I mean, even when we saw when we did see what happened with Norsk Hydro, we did see that sharp rally, and then subsequently again, you know, prices did drop with an equal amount of vigor. Let's talk about the slowdown fears that have sort of gripped the market. At this point of time, we're already in the midst of perhaps a slowdown in China. We are seeing growth numbers come in at the lowest level or at the lowest pace in many years. So how do you think this entire slowdown worry is going to play in on the metals complex? It's
a very interesting point. I mean, I totally agree that the Chinese growth is slowing, and we expect it to slow further during the first half of this year before it somewhat stabilizes later in the year as the effect of certain stimulus measures start to feed into that economy. However, what we're also expecting is a bit of a slowdown in the US economy later in the year, not least of which because of the boost that had been provided to the US economy from fiscal stimulus measures, namely the Trump tax cuts, will fade. And at the same time, as you mentioned earlier on the show, the European economy is slowing significantly as well, with some of the major economies either in recession or just teetering on the brink.
Okay, so you mentioned that the iron ore market could be a little more evenly balanced going into 2019. How do you see the rest of the base metal complex then?
We're negative on the base metals complex more broadly because of that relatively bleak look on the global economy. We think that most base metals will move significantly lower this year as the global growth slows, and that feeds through into weaker demand. The exceptions to this, to some extent, are copper and now to a little extent iron ore, where you've got some constraints around supply, which will provide some support for prices, at least compared to the declines we're expecting in metals such as zinc and nickel.
Okay, so you're not very optimistic. But, you know, Ross, in the event that the US-China talks do fructify into something more positive, and I think at this point of time it does look, because we have had Chinese officials go to Washington, and now it's going to be the other way around as well. So in that event, do you expect a significant uptick in base metals? Is that something as well that you've priced in and you're still negative?
We think that's unlikely that you're going to see too much of an uptick from that scenario. It is an upside risk to the forecast that there is a long-term permanent solution. However, we think that the comments from Larry Kudlow yesterday, for example, highlight that we're still some significant way from negotiations. There are various thorny sticking points between the two sides around it, and therefore we're still relatively cautious as to whether there will be a boost there. And we think that the bigger picture is that the global economic slowdown will occur even if the trade talks were to reach a positive resolution.
Okay, so that could be an upside risk to your own overall assessment. Ross, thanks so much for joining in on ET Now, giving us your sense of all the events that